Hey, what's up, everybody? It's Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, we're going to talk about credit card debt. Right now, many Americans are finding themselves overwhelmed with credit card debt. They're looking at different solutions. They're trying out these credit card debt solution companies where they're going to settle your credit card debt for less than half of what you owe. They're saying that there's special programs that are available for people who have credit card debt, all of this stuff. I'm going to clarify and I'm going to make it very clear to you. And I know that you trust what I say because you watch my videos. There are no quote unquote new laws and special programs to stop people from having to pay their credit cards. It's just a way that, you know, a marketing trick or whatever you want to call it, where they're just telling people that you had an option to settle your credit cards and you have other options that are available to you. So what I want to do is I want to walk through it. So if you're suffering with credit card debt, I want you to know exactly what you can do and what is not true and the repercussions of each option that you take. And I'm also going to show you on the website of the credit card companies, because they are the ones who ultimately will make the decisions on what they do and what they won't do. I'm going to take you to their website so you can see that they all have a hardship department. They hide it. They don't tell people about it. Even if you call, if you don't use the right words, you won't even get to the right department. So I'm going to show that to you. And I'm going to also give you some examples of what have happened, what we've been able to do with our clients where they've had to pay zero back on credit card debt. And I don't think there's many companies that can match that. But there's something that you got to do to be able to get it into that position. So first, let's talk about it here. Credit card debt hardship. Some of the options: defer payments. That's, you know, so you want to keep your card. You want to defer the payments. That's where you'll put the payments on the back. They'll give you a 3 to 6 months of where you don't make any payments to kind of let you reset. The interest will still accrue, so you're not going to get away with that. They're going to still want to make their money on that, but you could get relief where, say for instance, your credit card payments are $500 a month. With all of them, if you get deferments on all of them, you can have $1,500 and you can utilize that to kind of reset, put together a plan, maybe pay off some of the smaller cards, whatever that is. But just know that this is an option. My wife and I utilized this option when we were in debt trouble in the 1990s. We did deferments on everything: car, credit cards, everything. And we were able to start our process of settling debts because we saw how much money was going out, and you don't really know because you're making payments here, making payments there. But if you just didn't have to make any payments and you just had to do your regular household necessities, you would see that you probably have a lot of money that you could utilize to be able to pay off a lot of your debt, and doing that with settlements. So that is an option. Lowering your payments with the credit cards. I'm going to go into more detail about that in a minute to show you proof that you can actually contact your credit card company and have a lower payment arranged. And then settling the balances on, if you with the credit card companies. But that is a process. That's not something where you can just call straight up your credit card company and say, hey, I owe you $5,000. Will you take $2,500? I guarantee you, I know this is true because we deal with this on a daily basis. They will not settle a debt if you just call and try to do that. They're going to push you to deferment, and they're going to push you to lower payments because they're going to want all of their money. There is a process to get into that, and that's something that these debt settlement companies don't tell people and be honest about when they're talking to them. So settlement and debt consolidation, which are the two options that most people think about when they're looking at getting out of credit card debt. So quickly, I'm going to go on this side here because this one is pretty short, sweet, and simple. Credit card consolidation is where you put all of your debts into one payment. The only thing that a lot of people don't understand is that you have to qualify. And what I mean by qualify is that you're getting a loan. And do you think that people are going to loan money to you if you were screwed up with your other payments? Now, you might have some where you're able to get a loan if your job and your income is good, and they have a special program that might be able to qualify you. But most people, 99.9% of the people, do not qualify for a debt consolidation loan. The numbers are high. So if you've ever qualified for one, hand clap to you, because even with my situation the way it was back in 1994, I would not even qualify for a debt consolidation loan, mainly because I was self-employed. So that would have been the number one thing that would have stopped it. But the benefit is that it stabilizes your credit. So if you've already harmed it by missing some payments and where you're struggling, you're paying here, paying there, the balances are high, everything is out of whack. When you get that debt consolidation loan, it will stabilize your credit. But something that's happening, and if you watch my video yesterday with the new FICO 10 update, what they're doing is they're catching this little loophole that people utilize, because most people that end up with the debt consolidation end up in trouble where they end up being back over here. And that's because what they do is they pay off those credit cards, and then they have that one payment, and then all of a sudden they have all these credit cards that are open, and sometime down the line they end up maxing out those cards again. That's exactly what happens. So they end up back over there. And the thing about it is that a lot of these companies know that. That's why it's very hard for a lot of people to qualify for a debt consolidation loan, or for a debt consolidation loan that's going to be able to cover everything. You might qualify for a debt consolidation loan on some of your stuff, but what good is that if it doesn't reset you for everything and stop you from having to spend all of your money on payments? So what people end up doing is, if they do, even people that have the income and they're able to qualify to get everything paid off, and they stick it into their debt consolidation loan, they end up getting right back into this, and they're back over here. It's like a vicious cycle that these companies know. You'll see a lot of the debt consolidation companies doing referrals over to debt settlement companies, or they have a department that's in the debt in the debt settlement side, because number one, they want to keep that interest on getting the payments on what you've already done, and then with this here, they're going to be able to make more money from people, because they're going to say, hey, this person got into trouble again, they end up using their cards. Obviously, they're not going to qualify to refinance on a debt consolidation loan. Let's move them over here with either a referral. But the FICO 10 score, what ends up happening is that even to try to get loans to maybe refinance, the companies are utilizing, and they have it wrote into the algorithm to even know, even if you didn't go out and redo your cards, that you did get a debt consolidation loan. That was something that was not figured in the previous FICO score. So if you have credit card debt and you ended up getting it put into a debt consolidation, don't think that you've just ran from the underwriters. They're going to know, and they're going to be able to figure that out in their risk factors when they're doing their underwriting, and you may not qualify for a loan based on that criteria where they saw, and it's probably going to be some type of a scale, but it's where they're going to say, well, we think that the risk factor on this individual is not good, even though they have a high credit score. You could have a 725, 800 credit score, but if they saw how you manipulated the system by going out and getting a debt consolidation loan, they're going to look to see, number one, if you're paying on that loan and what you're doing additionally after you got that. That's why if you ended up getting into trouble here, it's going to be a no-go, even though your scores are good. And this is going to upset a lot of people when they start to learn about how this new FICO 10 is going to be figuring risk in, additional ways of figuring risk, not just the older ways that they figured risk. They're going to look at the ways that people manipulate the system, what they call manipulating the system, by getting a debt consolidation loan, which is really just readjusting your debt like businesses do it. But for some reason, they think that individuals shouldn't have that right. But when the new FICO 10 is going to figure out on that, and then if an individual meets, doesn't look like they're handling their finances, even though they reset by getting a debt consolidation loan, that FICO 10 is going to end up hurting them. So now let's go over here to the settlement process. Something that a lot of people get confused, and they sign up with the debt settlement companies or debt relief companies for their credit card debt, and they end up wondering, well, why, number one, when I signed up with them, did they make me stop paying my payments to the credit card company and start paying payments to them? Why is that? And they tell you in a roundabout way on the phone what they're doing. What they do is they keep your mind in the settlement mindset, which is logical, because the ultimate goal is to settle your debt. But they have to make you go through what's called a process of the charge-off process. And a lot of people don't understand this. See, you're thinking that just because you signed up with a company to settle your debts, that you can automatically just offer settlements to the credit card companies. No, you can't do that. It has to go through a process. That process is a charge-off process. Depending on what type of account it is, there's going to be a 3 to 6 month process on settling, being able to go into a settlement phase on those debts. And now this is discounted from things like auto repos, because it's already went through the charge-off process. For medical bills, if it's with a debt collector that's collecting it for the hospital, those can obviously be settled. We already know that with most medical bills is that it's actually, if you were the insurance company, they pay less than what the hospital tries to charge you for. So you can always negotiate medical bills with the hospitals. So this is specifically for credit card debt, because this is where most of the people run into trouble. So it's gonna have to be charged off. I don't care what they say to you. You can call your customer service person right now if you're signed up with one of these companies, and you can say, I want to settle this particular debt. And if it has not been charged off, I promise you that I would say 99.99999, all the nines, all the way. There might be a 0.0001% success rate that you would be able to settle the credit card debt before the charge off. And let me tell you the reasons why it is technically illegal for them to settle the debt before the charge off. Let me tell you the reason why. Because they have investors. It's not just about you and the credit card company like it's some individual. No, it's about you and a company that is a publicly traded company, and there's shareholders, and there's people that want to know, why didn't we make money on a certain group of accounts? Because this goes into my wealth of what I've invested in with your company. Or it just goes with a company. If it's a privately held company, there's a board of directors, there's other people that want answers on why are the profits lower. So the profits are not allowed to be lowered, especially with a publicly traded company. They cannot. I don't care. There's going to be people that might try to dispute this. They don't know. They cannot discount a loan without having it charged off, because the charge-off process is a legal process to take one account off of one set of books and put it on another set of books of non-performing loans. If they were able to just flip people no matter what, make settlements here or there, they would have, the books would just be tore up. It wouldn't even be true books, because they would say that these loans, it would actually make it look like this debt was put there for $5,000 and we only got $2,500. And it's like, well, why did we only get $2,500? And why? I'm looking at this being a value of $5,000. So it doesn't work that way. Don't let anyone tell you that it works that way. It doesn't work that way. Now, if you're going to a regular business, like we had this all the time with one of my companies, where a business owner gets into trouble and they're like, hey, Steve, we owe you $10,000. I'll give you $8,000 and we just settle it paid in full. That happens. That happens from time to time with one of my businesses, with business owners. But that's dealing directly with us, and we're not accountable to stockholders. We don't have to show our loan documents to any federal government regulatory group. So you have to go through that 3 to 6 month charge off period. And this is where a lot of people drop out, because if you're saying I got to go through 6 months and then I'm paying this company $500 a month. See, they need you to pay that $500 a month, because what they want to do with that is that they're utilizing that money to pay those settlements. So you have to go through that process. So once it's done here, so what they're actually doing is they're saying, okay, it's going to be a 3 to 6 month, depending on what type of account it is. You keep paying that $500 to us, and then we're going to settle your accounts on a portion of that money, because, and this is in your paperwork, you may not know this, but all of these companies are going to want to make 15%. So even if a company, say you paid $1,500, say you had a debt, you paid 3 months, $1,500, and say the debt was $3,000, and you knew that you paid the debt settlement company for 3 months, you got $1,500 in the account, and the account that you owed the credit card company was $3,000. They said, we want to do you a favor. We'll take 50%. It's charged off. It's already written off as a loss. We'll take $1,500 on the $3,000. You're like, what? Oh, let's take it. That'll be one company that's off the list. Let's just take it. Did you know that you cannot settle with that, because that debt settlement company needs to get 15% added onto there? Don't take my word on it. That's what they do. So what I'm doing is I'm just letting you know what you're dealing with. I'm just letting you know what you're dealing with. So call them up if you're already dealing with them. So for every one of your accounts, you could just add plus 15%. That's why a lot of people, they say that it takes 36 months to get out of debt. The reason why it takes 36 months is because you got 15% added on all of them. These people are not going to do it for free. And I don't expect them to do it for free. What I want to do is I want to make it clear to you what you're dealing with, so you don't get frustrated, so you can continue the process if that's going to be the route that you go at. And so you know fully what you got to do, because what I see these companies doing, which gets me upset, that's why I'm kind of raising up right now, is that they end up getting people to go out and get loans to pay them their 15%, and then they use their money to pay off that debt, and then they have another loan that they're paying on to pay that 15% to them. And those interest rates that I've seen on that was like 15 and 20% on there. So now they're making 15% plus interest on the loan that they get for people. I'm just telling you what it is. Now, when you go to debt settlement, it does not stop the companies from suing you. They all have the right to sue you. Now, you may be saying, well, I have a lawyer that with the debt settlement company, they don't represent you. That is not part of their fee. They do not represent you. I promise you, they do not represent you. So you can end up getting sued, and you're on your own. You're on your own, and you've still been paying them. And then when you walk in there in the court, you're saying, okay, well, I'm paying this company. So the judge is going to say, well, why isn't that company here to represent you if you're going through that? So they have you go through the process, you get sued, and then it's just back right up into here where it's obviously charged off, and then you're into the process, and now you just have a judgment, but the company is still going to try to settle that. It's still in the pile of the debts that you owe. It might have an additional amount because of some fees, but it's still in there, and you're still going to be dealing with the 15%. So you're in the same situation. It's just that I'm making you aware that you can get sued. And then using this process, it will ruin your credit. There is no way that you can allow stuff to be charged off. All of your debt, you stop paying the credit card companies, and you expect that your credit would not be ruined. And something that a lot of people don't understand is that you cannot do both at the same time. Be logical. So if you're saying, okay, I'm going to stop paying you, and then I want to get a settlement on the amount that you have, and I want you to remove it off my credit. No, that's not going to happen. And the debt settlement companies don't tell you that that can happen, because they know that if they say to the credit card company that you have that debt with, okay, he or she owes you $3,000. We want to settle it for $1,500, which they will not tell the company their fee that they're getting on that 15%. They're going to deal with that with you. So what they're going to do, what they'll usually end up doing is they'll say, hey, you need to get a loan so you can settle out this debt, because, you know, our fee plus the amount. And something that I've learned is that they won't tell you the $1,500. They're going to say that we settled the debt for, and they're going to include their fees plus the $1,500. So you won't know the amount that you actually settled it for. And so you need to understand that. So I kind of lost my train of thought on that, but just so you can, if you're trying to settle the debt, and these debt debt settlement companies know when dealing with credit card debt is that they can't walk in there and say, well, we want to settle this for our amount. Let's just stay with the $1,500. And then we want you to take that information off the person's credit report. They're going to be like, well, what the hell? What is in it for us? We're giving them half. We're settling this account for half of what they owe us. So what is in it for us? What is in it for us, the credit card company? Well, you're going to get $1,500. Well, we were owed $3,000. So no, we're not going to take it off the credit report. And so then people end up coming to our company because they're like, well, I did all of this stuff here, which is good, because no matter what, if you got yourself into a better situation, regardless of what you paid, because all of us the goal is to get to the right place. You could pay and it could be harder for one person, easier for another person. That does not matter. What matters is that you stay focused on the end goal. So if you deal with them, I'm just letting you know what you're going to be dealing with, and that you're going to need to come to a company like us to fix your credit, because it can be fixed after that process. There's no reason after the settlements are done that these companies need to worry about continuing leaving information on your credit reports. As a matter of fact, they're paid. As a matter of fact, they are paid. Now, before I move on to show you some of the websites, and you can take a good look at that right there, I want to talk about some of the potential options that could happen. I want to show you, number one, I want to show you on my site, and I want to briefly explain how we were able to work this out with our client, and then I'm going to show you on the credit card company's websites that they have information about hardship that they don't always tell people about for some reason. It's like they say it, but you gotta jump through hoops to get to it. So on my website, I love to use this example. We've had a whole bunch. You can watch that video that I just passed. We have a whole bunch that actually show where we've done this with smaller accounts. But I just think that with this big account that I always use as an example right here with one of my clients, that this one, this one right here is just, I just believe that this is like a big deal. Oops, let me get that. I just believe that this one is like a big deal, because right here you could see that the debt, take the weight. It was $36,240, which I got here, $36,248.30. This is a 1099, Form 1099-C. You see that right there, 1099-C. If you're not familiar, that means cancellation of debt. You see that? Form 1099-C, cancellation of debt. Details, Form 1099-C, cancellation of debt. The details, the amount, right here. Debt discharge, $36,248.30. You see that? That's proof that it can happen. So how do you get into this situation with being able to get a debt cancellation from a credit card company? Now, let me first tell you that you don't tell them that you want to get a 1099-C. That's a misconception. A lot of people email us and they're like, how can I make the company give me a 1099-C to cancel the debt? It doesn't work that way. How it works is that you prove the hardship, and it's like they look at your information and they end up making a determination that they should not go after you for that debt. So now let's look at here. Let's go here. Let's choose. We got Discover Card. The reason why I chose these, the ones that I'm going to show you examples with, is Discover Card is one of the companies that will hire an attorney to go after you if you owe money to Discover Card. They do not sell their cards. They don't sell it. They're going to come after you. They want to get their money. But you can see right here that does Discover have a financial hardship program? Yes, they do have a financial hardship program. So that right there shows it. This is the Discover website. Here are their key points that they have right here. Look at their key points. If you have unexpected bills or loss of income, may quickly lead to financial hardship if not addressed appropriately. So they're already telling you contacting your credit issuer is a good idea. Like they're like being very vague on this here, but this is what the options that you have with dealing with them. And then if your creditor cannot work with you to create a payment plan, now what they're basically trying to do with their hardship plan is to make you focus on everything else and keep paying us. And then if it gets to where you can't pay us, you need to contact us also. But so what you do, I'm going to run through some of the other ones, and then we're going to talk about how you can get these companies to thinking like what we had to get for our client, how we were able to get them to start thinking. So here's American Express. You can see right there, American Express. And you can see that they talk about the challenges. They say if you're struggling, that they have the programs. I could tell you they got right here, you got temporarily lower your interest rate. You got provide relief from late payment fees, lower your monthly payments. So if just say that you can make it, if you could just have that monthly payment lowered, you can do that. And then it prevents your account from going past due. And it says, please note that enrolling in the plan. So they actually have a plan. They have a phone number that's right there. This is American Express. Reason why I talk about American Express is because American Express is one that hires out. They have a firm and they hire out to have people call you to collect their money. They don't sell the debt to other companies. As a matter of fact, American Express is they're like cold, stone cold. I have business clients that are from other countries, and I mean, hey, what they do is they'll match you up with somebody, and they in a way use religion on some of these people to try to get them to pay. They used it hard on one of my clients, and he was like, Steve, what should I do? I was like, man, we just need to settle. We were already in the settlement process with them, but they were like using some religion on him, knowing that his religion it's not good to not be paying those debts. So let's go to the next one, Capital One. I'm seeing a lot of Capital One's lawsuits. Here we go. A lot of Capital One lawsuits coming across my desk. They're utilizing companies to go out there and collect for them. They got here. They're here for you. Our self-serve tools. I guess they got some tools here. They want you to pick your state. I guess you could pick the state that you're in. Let's see here. Well, it don't seem like this wants to work, but it looks like you could pick your state and pick your state. Well, you get the gist that they have a hardship department. This is the big thing that I want to get across, that they have a hardship department. All of them have different options, but now let's talk about how we were able to get that 1099-C for my client, because $36,000, that's a lot of money. A lot of you, it's like five, 2, 3, 4, 5,000, 8,000. We're talking about $36,000. You're like, well, man, how can I get that to work for me? What you have to do is you have to contact the hardship department. You have to listen to me. Specifically ask for the hardship department. And then you need to have them send you in writing or send it through email exactly the options that you have available for the hardship. Now, they're not going to get into what I'm about to tell you. What I'm about to tell you is that when you write back to them, you need to give them a financial letter that states your financial situation. And depending on who gets it, it's not like this happens every time. Depending on who gets it, who reviews it, and if they believe what you're saying, if this is going to be your condition moving forward, or there's a whole bunch of things that goes into it. I'm not going to pretend like I'm in their office making the decision. It's going to be different for everybody, but it's at least worth trying, because you already saw the result there, and I have other results that you could look at on that video where this exact process was done. And no, there is no quote unquote template for it, because each of you have a different situation. Each of you are going to be dealing with different companies. But so when you get to the hardship department, you ask for all of the options, and you tell them what you're going through, loss of income, whatever it is, medical situation, whatever it is. Based off of what they have for their options, based off of your specific situation, you're going to need to craft a letter and make sure that you get it to the appropriate department and have them make a decision on what they're going to do. And then you can actually, when you're putting that letter together, you can actually make the request by saying that you're just not going to be able, your financial situation from your own force, for what you foresee right now, depending on your situation, is not going to be changing. And if it's not going to be changing, then they're going to have to make a decision on what they're going to do. Because if they know that you've expressed to them and you've proven to them, not by numbers, not by documents, unless you have an illness or something like that, or you ended up filing bankruptcy with some other stuff, but they were not included, or whatever it is. Maybe you had a business bankruptcy. Utilizing that information, letting them know what's going on with your situation, they will get it to the right person, and they will make a determination on what they need to do. And some of the times they may just say that they're going to do a full discharge of the debt, do a 1099-C. Some of the times they may come back and offer you a generous settlement where you don't even have to pay a company the additional 15%. So the options, you won't know the options until you, number one, reach out to them and see what all options are available. Now, what we do for our clients, because we know that people are scared. The reason why businesses like mine exist in other companies, because people are scared. Number one, people are scared. If they're not scared, they don't have, they got to work. They got to do things. They don't have a follow up, ability to follow up, because they're just too busy with their life. And so what we do as a company is that we actually get connected with an individual and we express what's going on. And just like with this client, when we told them in writing exactly what was going on, they decided to go ahead and just do a 1099-C to just forgive that debt. And as a matter of fact, with this client, we did that with over $240,000 worth of credit card debt. $240,000 worth of credit card debt, paid zero. Not to say that that can happen for you, but I think that it is something that would be worth trying if you find yourself in that situation. And if you are interested in something like that, you call our office. There is a fee for that. We don't do it for free. And it takes a lot of work. And we would have to know how many accounts you have to run through that process. This is not some gimmick. This is not some thing that you see where the 1099A and the 1099 OID. No, this is to deal with credit card debt. As a matter of fact, deal with any debt, but specifically with credit card debt, we've been able to utilize this option for. And then worst case scenario is that you end up doing a settlement. But the difference is that if you end up going to court where they sold it to a third party debt collector, we have a process to actually attack those third party debt collectors who buy credit card debt. And we've had several victories on getting those cases dismissed. You can go to our website and check out those. All right, so I'm going to end the video here. Please like this video. Please post your questions and comments. If you have credit card debt issues, reach out to us. We can help you, or utilize the information that you saw in this video. Watch it again. This is very good information. Sometimes it can, I can be a little fast, but I'm just telling you, this stuff really does work. It's what we do every day here at the Credit Repair Shop. So deal with your credit card debt. Don't let that just sit there. It's not going to go anywhere. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, what makes us different, so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, do me a favor by going to the website, yourorder3scores.com. Grab those credit reports. Has your TransUnion, Equifax, Experian credit reports, all 3 scores. It has all the information about the furnishers. And if you decide to sign up with our company, that locks right into our software, and we're able to get to work right on your credit. If you need help with debt settlement, we can help you with that. If you need help with responding to court summons or court complaints, we can help you with that. Links are below this video. If you have debt collectors coming after you, grab my 3-pack of letters. Statute of limitations, debt validation, cease and desist, collection activities letter. Please make a donation. If you decide to get those, it's well worth it. You'll be able to use them for the current debt that you have and anything that you have in the future. So it's well worth it. And then I have an updated pack that's $29.95. You can grab those also. Thank you for your time. Subscribe to the channel. Post your questions and comments. This is Stephen A. Williams, President and founder of thecreditrepairshop.com.